Hello, good morning. Happy Friday, everyone. And trust you having a wonderful day. And I hope you are also getting ready for the New York session today. So I'm having a little hitch here as my app is not loading up, so I can see how relate with you guys this morning. But I will try to restart my phone and see if I will get something positive after it does restart. So while I run through that, I welcome you to another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host as we going to be diving into the financial markets to identify potential trading opportunities lining up for us today. And for those who are joining us for the first time, you are highly welcome on board. I'm so glad to have newcomers in the house. And what we simply do here on a daily basis is to review. So we have some series of financial instruments that we have been monitoring since the beginning of the week. So we look at these pairs on a daily basis to see how well they are doing. And then we dish out information on how to manage those trades, and then look out for more opportunities to take advantage of as we get ready for the New York session. So initially it might be a little bit overwhelming at first because this might be your first time that you are, since this is your first time with us, so it will probably take some time for you to get to understand how this works. And I assure you that it's quite simple. With time you get to understand how it works, and you will be able to use the information you have gathered here to make your own individual and personal decision. So once again, you are welcome on board. So right now we shall be diving right into the business for today, and you all know what we look out for whenever we start the day. We want to keep tabs with the fundamental by checking the economic calendar to see if we do have any macroeconomic event to look out for today. And you all know how important the macroeconomic event is. It's like a catalyst that helps us to drive price movement. So whatever technical position we have during the analysis, we still need some catalyst that will be driving the price movement. So this is why we want to look at the economic calendar so that we can position ourselves in such a way that we can catch any potential move during or after the event. So on the economic calendar here, when we tune into April 14, which is today, we have a couple of events to look out for. And the first one here is the retail sales, which is an index released by the US Consensus Bureau, and this measures the total receipt of retail sales in the economy. So this is we have the data we have the previous month came in at minus 0.4%, as we can see that the consensus are projecting a minus 0.4%. So this is coming up in about an hour 30 minutes from now. So 2 hours 30 minutes from now. Then we also have the Michigan publication, that is the Consumer Sentiment Index. This is a survey of personal consumer confidence in economic activities. So it goes on to show us a picture of whether or not consumers are willing to spend money. So this is another high impact event that everyone will be looking forward to, as it will be giving us a clue into the health of the US economy. So we shall be waiting for this event, and we shall obviously see how participants in this market will be anticipating this event, as it shall be reflecting on the chart as price action. So with that being said here, let's dive right into the chart to position ourselves ahead of the New York session. So as usual, the first commodity we are going to be looking at this morning is the US oil commodity. So right now we are on the 1 hour time frame. Please hold on a second. I'm trying to see if my chat will come up here. Okay. All right, I think I can now see, so I will be able to relate with you guys. All right, everyone. So I'm back live on, so I can see your comments now. So if you have any comments, please let me know in the comment section. So as we are saying here, this is the 1 hour time frame of the US oil, and on the US oil, we have been buying the US oil since the beginning of the week. I think on Tuesday we bought the US oil, though we had some sell positions at the beginning of the week. So on the situation here, let's run through how the week started for us on the US oil. So as you can see on my chart here, the week started on the bearish note initially, as we saw price action started at around the $81 level, and then we have the support line here at the $80.45 area. So it was quite a choppy situation during the first 10 to 12 hours of the week here, where price action was trapped within this channel. And you all know what we look out for whenever we cite this kind of situation here. We want to see price action either break out of the channel for buying opportunity or breakdown of the channel for selling opportunities. And as you can see here, we had the breakdown of structure, which triggered our sell position, where price action moved about 80 pips thereabout in our favor before it snapped back into our entry point. Obviously, we moved our stop loss accordingly to lock in some profit. We were taking out with a small profit, or at a worst case scenario, break even if you had moved your stop loss to your entry point. Then on Tuesday morning, we had an opportunity to add more position. As you can see, price action evolved into a technical expectations, where a breakdown of structure, retest of structure, would also welcome additional position, and that one also moved about 100 pips before we begin to see that bullish move that came in on Tuesday, and since then we have been finding higher highs and higher lows. And if you remember, on Tuesday we acknowledged the fact that price we had a demand zone between the $80 MAC and the $80.45 area. As you can see here, that every attempt by the sellers to break down that structure has been met with strong resistance from the buyers at every point in time, to further emphasize the strength of the buyers at this particular juncture in this market. And this finally led to that bullish momentum we witnessed here on Tuesday, where we had the privilege of joining that bullish momentum, had the breakout of the $80.45 level, and we rode the move all the way to the upside. Then during our live session a couple of days ago, we identified this channel here, which also triggered another buy position at the breakout of the $81.70. So during our live session yesterday, this was what we were looking at yesterday. We saw that as soon as price got into the $83.37 level, we saw a consolidation phase happen, where price was trapped within that $83.37 and the $82.80 level to give us a consolidation phase. And obviously, we all know what we look out for whenever we have this kind of simple setup. We want to see either a breakout or breakdown of that channel for trading opportunity. So with the sell stop order placed below the support line here, we had our sell position triggered yesterday, and in fact price action had moved over 100 pips in our favor before we started seeing this choppy situation. And for those who had joined this move here yesterday, well done to you for being on standby to have caught this opportunity. As if you still have a position running right now, you will currently be running with about 54-55 pips thereabout, which is not bad at all. And at this point, you know what we do next. We want to be securing this current position by moving our stop loss accordingly to lock in some profit. And from my point of view here, I'm of the opinion that anywhere right above the $82.50 level seems most appropriate to secure this current position while we continue to monitor price action. Now, with the situation of things right now, what is going to be our next line of action? What are our plans for today? Now, before I go into the details, I want us to look at this chart very well, and then I would like to call our attention to the structure here we laid emphasis on yesterday, and that is this ascending channel that happened here before the breakout of the resistance line of the ascending channel happened. And if you recall vividly, I made mention of the fact that if price action ever breaks down the support line at the $82.80 level, that it could be a retracement of the impulse leg that started the week. And if that happens and the bearish momentum continues to the downside, I told us all yesterday that we are going to be using this channel here, if we extend it further, to guide our trading activity if selling pressure drops into that area. And as you can see here, when price action dropped into that structure, we saw a consolidation phase happen around here. And when I opened my chart this morning, this was what I was able to identify. So we have a resistance line here at the $82.50 level, and then we had the support line at the $82.15 area. So we had a little consolidation phase happen within that ascending channel, and what we saw afterward was quite interesting here, as we saw price action break down the support line at the $82.15 level to signal a potential trend continuation to the downside. And if you remember, I told us all that if it depends on how price action reacts to this ascending channel, that will determine if we are going to be adding more sell position to our existing trade, or we might be getting ready to join another the second wave of the bullish momentum that started the week. But with the look of things here, and judging from what has been happening in the market in the last 3 to 4 hours, and considering the breakdown of the $82.50 level, you would agree with me that a selling momentum is very, very likely at this point. As you can see, price has also broken down that bullish trend line to the downside, hence we might likely be looking out for selling opportunities at the breakdown of the $82.15 level. So what this simply means here, if I give a visual representation of what has happened so far, so we have this price broke down the support line. So, and you all know from a technical standpoint that we might likely be seeing a retest of structure that will now incite that wave to the downside. So with this in mind, I will be suggesting that we have a sell stop order below the $82.15 level, so that we can be part of that move if price action will drop to the downside. And to further support this bearish momentum, bearish expectation in this market, remember yesterday we had a bearish trend line after we connected a series of lower highs within that consolidation phase yesterday. So we had a trend line. So what this simply means is that the trend line here will be one of our yardstick for trading activity today. So what this simply means is that if price action continues to trade below that trend line, we shall feel comfortable in our sell position. So with the breakdown of the structure happen here, it's still very possible that price goes to go as far as retesting the $82.50 level, or that trend line where selling pressure below the structure on our lower time frame will give us that opportunity to join a sell momentum to the downside. So these are the things we shall be looking at to sell the US oil for today. Now, you all know what we do here. Even though we are having a bearish bias here, we also want to take into consideration what opportunities the buyers have in this market. So in as much as we are looking out for selling opportunities in this market, we should also take into consideration what buyers could likely do if they finally take over the market from the sellers. Now, if we go to as far back as the beginning of the week, you would notice that we have an impulsive move already. We started at the $79.50 area, bringing price into the $83.37, and I'm of the opinion that the lower highs we have been witnessing so far may likely be a retracement of that impulsive move that started the week. Now the question is, When will the retracement phase end? That is what we don't know. And as a result of that, we actually used our Fibonacci retracement tool to project a potential TP target for sellers here, which fell between the 50% and the 78.6% of that retrace of that impulse leg. So we had that zone around this area where we said probably price and the retracement phase could end, but it's not all the time price action does this, as we might likely see a retracement end around this area and a bullish momentum could start at any point in time. So in that regard, we want to also take into consideration the current structure so that we can actually be on standby if a bullish momentum will spring out from this area. Now, before I go into the details of how to join a bullish momentum at this point, I want to call our attention to the breakout of the structure that happened here a couple of days ago. So we saw the breakout of the $81.70 level, which also shares a confluence with that resistant line of that ascending channel we identified there. And you all know from a technical standpoint, whenever price action breaks out of a structure, we expect that one point in time price is likely going to come back, do a retest of that structure, and the appearance of buy pressure above that level could incite the beginning of the second wave of that momentum that broke out of that structure. And now, if you look at what has been happening so far in the last 3 to 4 hours, you will see that price action has retested the $81.70 level, that level that was broken here on Monday. We've begun to see buy pressure resume, at least in the last 3 hours. We have been witnessing some bullish momentum in that regard. Now, one thing I would like to state here is that to buy the US oil at this point, we still need some further confirmations to happen. It could be a breakout of the bearish trend line, giving us a sign that the trend line may no longer be strong enough to continue to hold that bearish momentum. And now, if that is going to be the case here, we might likely see price action transition into a reversal pattern in the form of a inverse head and shoulder pattern, where we have the right shoulder here and the $82.50 level serve as the neckline of that reversal pattern. And if you look at this closely, it shares a beautiful confluence with that trend line. So that means a breakout of the neckline area would also have broken above the trend line, giving us a clue that the trend line is not strong enough to hold that bearish momentum anymore. And by pressure above this level on our lower time frame will definitely give us an opportunity to add more position to our existing trade. So to buy the US oil today, we have no choice than to wait for price action to break out of the $82.50 level to give us a signal that that area is to give us a signal that the selling positions around that area has been taken out, to give us that platform to buy the US oil for today. So that is how we are going to be trading the US oil today. Excuse me. So that's how we are going to be trading the US oil today. So at this point in time, we have two perspectives where we are looking at the sell potential in the market, and we have also looked at the potentials of the buyers to do a trend continuation from this area. So we have the $82.50 level right above that structure for buying opportunities, and we have below the $82.50 level for selling opportunities, where a further breakdown of the $81.70 level will be welcoming more position to our existing sell position here. So screenshot my screen so that you can use it as a reference point when you're about to make your individual decision for today. And if you do have any questions regarding what I've just explained so far, feel free to drop your enquiries in the comment section below. Miyagigi, good morning to you. I can see your comment. How are you doing today, Miyagigi? And trust you're having a wonderful time out there. All right, glad to have you around. So in the absence of no questions, I want to assume that we're on the same page here, so I will be moving on to the next option. So the next option we shall be looking at this morning is the US Tech. All right, on the US tech here, we have been profitable in the last 24 hours on this chart. As you can see, price action after taking advantage of the bullish momentum at the breakout of the 12,900. Our price action moved over 200 pips in our favor before we started seeing the consolidation phase happen around that level. And for those who took advantage of this opportunity, well done to you guys for being on standby to have caught this move, as we are currently in a massive profit at this point. And for those who still have their positions running at this point, some of us will have taken our profit anyways, had a 13,100 mark, which was where I projected that our TP target could be. But for those who still have a position running at this point, I will be advising you to secure this current position by moving your stop loss accordingly to lock in some profit. And the most appropriate area I will be suggesting will be anywhere above the $13,000 and $13,020 mark. Anywhere above that area seems most appropriate to lock in some profit while we monitor how price action is going to be reacting to the zone to determine what our next line of action will be. So this is the view we have here on the US tech for this week so far. So we can see we have a demand zone here at the 12,850, which has been holding by pressure since the beginning of this week, and a further breakout of that bearish trend line that we identified at the beginning of the week was a beautiful signal that the trend line was no longer strong enough to hold that bearish momentum to the downside. So at this point in time, we are at a critical point in the time right now, as we are at the resistant line of the week, which is a $13,100 mark. Remember, this is where price action started this week. We had the resistant line here, and we have been witnessing selling pressure anytime price action comes into that structure, giving us a clue of the strength of the sellers at this point in the market. So every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers. Now, if you look at what has been happening in this market in the last 12 hours, I guess, last 18 hours, sorry, you will see how this area has continued to negate all attempt by the buyers to break out of this structure. And with this in view, we might likely be seeing price action respect that level to incite another sell momentum from this area. So we will be tending towards a bearish momentum from this level. And for those who are taking advantage of a sell position right from this area, well done. It's a very good opportunity right there to sell at that point. You want to be moving your stop loss right now to lock in some profit, secure the current position as we continue to monitor price action. Now, look at the situation we have right here. Price action is at our key level. This was the key level we identified at the beginning of the week. That is the $13,060 mark, currently trading around that area. So it is very important that we see our price action react to that level to decide what our next line of action would be for today. And before we go into the details of what to look out for around the 13,060, let's run into the daily time frame to have an holistic point of view of what is really going on in this market, so that we can align whatever structure we have on the higher time frame with what we have on the lower time frame to decipher if truly we are actually going bullish, or probably we might be seeing a retracement or profit taking activities as we head into the weekend. So in that regard, I will be scaling up into the daily time frame. So let's run through the daily time frame and see what is happening here. So this is the daily time frame here. Hold on a second. Let's run through this. So my center of focus here will be on what has been happening since the beginning of the year. And if you look at the structure closely, you will see how price action started the year at that demand zone at a 10,500 level, and since then price action has transitioned into an ascending channel, which you can see on your screen right now. After we connected the series of higher highs and higher lows, we have this ascending channel. Now, with the situation of things, when we looked at what happened at the beginning of this month, we saw the final breakout of the 12,800, a very significant level which has been a strong selling niche in this market since the month of August last year. So you can see how that level has been a strong selling niche in this market, as every attempt by the buyers to break out of that structure was negated by sellers at every point in time. However, some things became different this month when we saw the breakout of the structure, which happened to be the first time price action will be breaking out of that level in the last 7 to 8 months. And since the breakout of that level had happened, we can see that bullish momentum appeared to have reduced, as we saw a consolidation phase between the 13,220 level and the 12,800. And at this point, we want to take into consideration this consolidation phase here. So I would like to map out the resistance line of this channel that we have here at a $13,220 mark. So let's figure that one out. Label it 13,220 level. So that is our resistance point. And as you can see here, in the last 2 weeks, that level has been negating bullish potential in this market. And even this week so far, you can see that even though we had some bullish momentum, we can see that price is yet to come even close to that resistance line. And in the last couple of days, we have been seeing sharp rejection of that $13,100 mark to emphasize some level of strength for the sellers at that point. Now we are at a critical point in the market here, where price has been consolidating, giving us a clue that there is an indecision in this market. Hence, they need to be very more careful to wait out for a signal to happen. And you all know what we look out for whenever we have this kind of simple setup where price action is trapped within a channel. We want to see price action either break out of the channel to the upside for buying opportunity, that is, turns out to be a trend continuation pattern, or a breakdown of the channel to the downside to incite a sell-off. Then the structure there will turn out to be a reversal pattern. So these are the things we are going to be looking at when we scale down to a much more lower time frame. So we are going to be taking all this into consideration. We are going to go back into the 13,100 level. As you can see, that level has been a strong selling niche since the beginning of the week, and then decide if we are going to be selling from there or buying from that point. So with the information we have gathered here on the daily time frame, let's scale back down into our 1 hour time frame to plan for today. So what I will be doing here is to delete some of the illustrations we have here, so that we can have a clean chart before I so I'll delete this one too. So bring out my line chart at this point. Then I would reconnect the lower highs here, so we have new lower highs now, and then give it a tick line. I'll delete this one. So this is what we have right now, and let me delete this one. We don't need this, and we don't need this to either, as we have a demand zone here already, and we shall continue to use this demand zone to guide our trading activity. So this is the channel that started the week. So this was where price action was trading at the beginning of the week here. So we had that channel there where we had some sell positions at the breakdown of structure. And as you can see here, the resistance line still holds. So price action still respects the resistance line. So I'm of the opinion that we might be going bearish this today. As you can see, buyers have tried as many times as possible to break out of that resistance line, but it had failed at every point in time. So anywhere below the $13,060 mark here today will be an opportunity for us to sell. So we are going to be looking out for selling opportunities below the 13,060. So we are going to be looking out for something like this breakdown, retest of structure to join a decline to the downside. Hold on a second. I'm looking at my chart right now. It doesn't seem that my chart is moving. I hope you all can hear me and can see my screen. My app just shut down again, and unfortunately I will not be able to follow up with your comments from now on, as my chat just shut down again. So all right, I just hope you can hear me and can see my screen, please. I can't even confirm if you can do so by checking the comment section, so I can't see the comment section anymore. All right, so let's continue. I hope you can hear me and I can see my screen. My monitoring device says so, and I hope it's happening the same way on your own hand. So right now, like I was saying, I will be looking out for selling pressure below the $13,060 level to join a sell momentum here. So what I want to see here is price action dropping below the structure here, and continued selling pressure below this level on my lower time frame will be giving me that comfort to join a decline to the downside. And we have a privilege of having more opportunities if price action breaks down the $13,000 level, which is a strong psychological level, and as you can see there, it shares a beautiful confluence with that bearish trend line. So at this point in time, when price action drops to the downside and continues, as soon as it gets into that $13,000 mark, we want to be moving our stop loss accordingly to secure the sell position we took advantage of here, and then wait out to see how price action will be reacting to that structure to determine if we are going to be adding more sell position to our existing trade, or we are going to be joining a bullish momentum. And as you can see, we had the breakout of the trend line here and the $13,000 mark here yesterday. And from a technical standpoint, price action could still come back, do a retest of that structure to incite another wave of bullish momentum. So because of the bullish momentum that is possible from this area, I will suggest that as soon as price gets into this level, kindly move your stop loss, secure the sell position, and if a further breakdown happens, then we will be in to add more position to our existing trade. But if buy pressure resumes above the $13,000 mark, which also shares a confluence with a trend line, then we will have no choice to look out for reversal pattern to join the second wave of that bullish momentum. So that is how we are going to be trading the US tech anywhere below that 13,060. However, if that did not happen and instead price action continues to the upside, how do we intend to trade this one? Then things will become a little bit interesting at this point, as you can see we are at a very strong resistant line, which has been a strong selling niche for participants in this market since the beginning of the week. So I would rather want to see price action do a significant breakout of that level, taking out all the sell position around this juncture for me to see a beautiful confirmation to join a bullish move. So what this simply means is that we have to wait for price action to significantly break out of that structure, and as soon as that happens, we scale down to our lower time frame to look out for retest of structure. It could retest the 13,100, or it could even go as far as retesting the 13,060. But the most important pattern we want to be seeing is a reversal pattern on our lower time frame, buy pressure giving us signs that sellers are finding it difficult to push price to the downside. Then we could then join a bullish momentum to the upside. So that is what I want to see here before I could consider buying the US tech at this particular juncture in time. So we want to see a significant breakout of that structure for that opportunity to come in. So that is that on the US tech for today. I hope I made myself clear. Unfortunately, I can't see any questions whatsoever, so I will just continue, and I hope that things are working fine from your own end. So moving on right now, we are going to be talking about the XAUUSD, which is one of the most profitable trade for us this week. As you can see, price action has consistently found higher highs and higher lows in this market, and yesterday we saw that significant move that broke out of that $2,032 $2,032 mark for the first time this year to establish a new high at a $2,048.50 level. Now, with the situation of things right now, we already have a new high on the XAUUSD, and congrats to everyone who was part of this bullish move to the upside yesterday. So how did the week started for us on the XAUUSD before we go into the details of what our expectations are for today? So we saw the situation where the week started on the bearish note as we saw price action resume at the $2,008 mark, dropping in such a way that it broke down our key level at the $2,000 mark. And we all anticipated that price, because of the breakdown of the key level, that we might be looking forward to a bearish momentum this week, and we saw selling pressure resume around the $2,000 mark on our lower time frame. And in fact, we took advantage of this move where price action moved about 170 pips in our favor before the bullish momentum began. And the bullish momentum began here around the 1,989, leading to a situation where price broke out of that trend line, which was supposed to be guiding our bearish momentum for the week. So we saw the breakout of the trend line. And what makes this very interesting was the fact that that trend line also shared a confluence with that key level at the $2,000 mark. And with a breakout retest of that trend line, we had a beautiful confirmation that we are going bullish for the week. And with this situation identified on Tuesday, we had a buy stop order above the $2,000 mark, which triggered our first buy position for the week. And since then, we had continued to join the bullish momentum to the upside, adding more positions at the breakout of key structures like the 2008, 2011, and $2,020 level, and recently the breakout of the $2,032 level. So once again, I congratulate everyone who has been part of this profitable journey since the beginning of the week on the XAUUSD, as you guys were patient enough to wait out for structures to mature before joining or taking any position. So well done, guys, on that one. Now that we are going into the New York session today, what is going to be our plans on the XAUUSD? What do we want to see on this chart that will make us feel comfortable to buy? Or what are we going to be seeing on this chart that would make us comfortable to sell? So these are the things we are going to be looking at today. So I advise that you stay tuned in and listen attentively so that you can get this point. Now, the first thing I'm going to acknowledge on this chart is the fact that price action has been bullish since the beginning of the week. And to further emphasize the strength of the buyers in this market, we have a beautiful bullish trend line which has been supporting that bullish momentum. And at this point, we agreed at the beginning of the week that this trend line will definitely be serving as our yardstick for trading activity. So what this simply means is that as long as price remain above the trend line, we shall feel comfortable buying the XAUUSD and looking out for more opportunities to add more position to our buy trade. But if at any point in time price action breaks down the trend line to the downside, and look at what the structure is saying here, it also shares a beautiful confluence with that $2,032 level, which happens to be our previous high that was broken yesterday. So if it breakdown happens, then we might likely be getting ready to sell at the site of a retest of structure, selling pressure resuming below that structure, giving us a sign that buyers are finding it difficult to climb back above that bullish trend line. Then we can be looking out for more opportunities to add more sell position. So these are things that we are going to be looking at this point. Now, presently, what are we seeing on the chart here? First of all, we want to acknowledge the psychological expectation around this area. And if you remember vividly, I always mention that whenever price action finds a new high, there is always a high chance that we could witness a choppy situation, which is as a result of the dominance of the emotion of fear around this juncture. So it always takes some time for price action to acclimatize with a new high before another impulsive move can actually break out of that level. So most of the time we will always see choppy situations like retracement phases, consolidation phases, with the aim of gaining more liquidity to be able to break out of that new high. And as you can see, what has been happening here in the last 18 hours, price action has been caught within that channel between the $2,048.50 level and the $2,032 area, giving us a clue that there is an indecision in this market. And if we consider the macroeconomic event that we are expecting in a couple of hours from now, I'm of the opinion that this consolidation phase is well justified, as majority key players in the market will have stepped aside at this point, waiting for a catalyst in the form of the macroeconomic event to see what data comes in order to position ahead or after the event. So at this point, you all agree with me that whenever we have this kind of simple setup, what we want to be doing here is to remain patient, to look out for either a breakout of that channel to the upside for more buying opportunity, or a breakdown of the channel for selling opportunity. But at this point in time, if we take a closer look at this channel here, you will see that we saw in the last couple of hours, we saw a sharp rejection of the $2,032 mark. Now, the question that you will be asking after citing that is this a bullish signal? Is this a sign that price action has come back to retest the structure that was broken yesterday to incite another wave of bullish momentum, and at the same time respecting that bullish trend line that has been supporting that bullish momentum since the beginning of the week? These are very, very valid questions that we also want to be looking at, and then understanding how price action has been playing out since the sharp rejection of this key level at the $2,032 level is. Now, another thing I would like to state here is that whenever price action comes into an important confluence, like this structure we have here, sharing a confluence with a trend line, it is very important that we note that anything could happen from this area. We could see price action break down that structure to incite a sell-off in this market, and at the same time, we could see buy pressure resume around this area to incite a trend continuation to the upside. Now, the next question we'll be asking is, what could happen here? Is it a buy pressure we should be looking out for, or is it a breakdown of structure that would happen? So this answer will lie on a much more lower time frame, like the 50 minutes time frame, where we want to see the nature of the market structure in the last 3 hours. So in that regard, we shall be scaling down to a much more lower time frame, like the 15 minutes time frame, so that we can identify what is really going on around this area. So I would like to zoom in and then bring this channel into our purview so that we can see what is really going on here. So right now, this is what we have on the 15 minutes time frame. And if we look at what has been happening since the early hours of today, the first thing I would like to do here is to bring out my line charts and then connect the lower heights since the early hours of today, and we should be having something like this. So we have a trend line here, which if price trade below the trend line, we shall be seeing this as a potential move. We might be seeing this as a likelihood that we might be seeing a breakdown of the structure. So for me to sell the XAUUSD today, I would rather wait for price action to drop below the $2,032 mark here to join a sell momentum to the downside. But if you want to maximize the sell position, that is, instead of waiting for price action to drop below the $2,032 level before we could join, you might want to look out for an opportunity to actually join that sell move right around this area, even before it gets into the $2,032 mark, hereby maximizing the profit from that potential bearish move. Now, if that is the case here, what we're going to be doing is to acknowledge that we have a structure around the $2,037.50 level, which has been a platform for platform that has determined price action in the last couple of hours, as you can see. Okay, $2,037.50 level, as you can see. Look at what happened here a couple of hours ago. We saw buy pressure, we saw the breakdown of structure, price climbed up, we saw rejection, we saw another sharp rejection, 15 minutes ago around this area. So if we are going to maximize a potential sell pressure, that is, if price action will continue to respect this bearish trend line, then I would wait for a breakdown retest of a $2,037.50 level to join a decline to the downside, after which a further breakdown of the $2,032 MAC will welcome selling opportunities in this market. So that is how we are going to be looking out for selling opportunities today. So we have a key level already at the $2,037.50 level, which has been a determinant of price action in the last couple of hours in this market. So that is how we are selling. And the trend line here will be our guide for this bearish momentum. So that simply means that as long as price remain below that bearish trend line, we will feel comfortable in our bearish momentum. And a further breakdown of the bullish trend line and the $2,032 level will welcome more opportunity and give us more confidence to add more position to our existing trade. However, if price action breaks out of this trend line, then we might have an opportunity to join a bullish momentum even before it breaks out of that resistant line, which is the highest point price action has been this year, at a $2,048.50 level. And the only way we could take advantage of that bullish momentum is to acknowledge the resistant line here at the $2,042.50 level. So for the sake of clarity, let us also acknowledge that structure. So the 2000 and I think we should 2043 seems most appropriate here. Okay. 2043 seems most appropriate here. So let's label that area. So we have 2043 level. Okay. And look at it here. It also has a structure here. We saw selling pressure here. We saw selling pressure here. And if price action ever breaks out of the 2043 level, then it would also have broken out of the bearish trend line that we identified earlier. So remember, this is the bearish trend line here. So a breakout of both the trend line and the $2,043 level will be a buy position here. So what we are going to be doing, we are not having a buy stop order above that level. Remember, we are not getting too excited here. We want to see some confirmation before we join. So a breakout of structure, a retest of structure with buy pressure on our lower time frame will give us that leverage to join that move to the upside, where a further breakout of the $2,048.50 level will welcome additional buy position to our existing trade. So our center of focus for today right now is between the $2,043 level and the $2,037 area. So this is where our center of focus will be, and the trend line here will be our yardstick for trading opportunities. So price action trading below the trend line will give us selling opportunities, and a breakout will definitely give us an opportunity to buy. So let's be on standby. Screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this commodity. Unfortunately, I can't see your comments. I still cannot load up my chat. Let me try it one more time and see if I could do that. Okay, so let me just restart my, and probably before it restarts I will sort things out. All right, so that is that on the XAUUSD for today. Now we shall be moving on to the last pair for today, which is the BTCUSD. And let's see the BTCUSD this morning and what was our expectations at the beginning of the week, and what are we seeing so far on the chart. Hold on a second. Okay, this is not what I used. All right, so here we are. So since the beginning of the week on the BTCUSD, we have been buying, and in fact we had our first buy position at the breakout of the $28.500 level, as you can see here. Then we had a second position at the breakout of the $29,350 level, after which we saw the situation here where price action was trapped within that channel at the $13,300 level and the $29 $900 area. And you all know what we look out for whenever we have this kind of simple setup. We want to remain patient and wait for price action to either break out of the channel to the upside for buying opportunity or breakdown of the channel to the downside for selling opportunities. And this was what our projection was during the live session yesterday. And to further make things a little bit easy for us to be able to identify and feel comfortable in our position, we connected a series of lower highs here to give us a bearish trend line, which we said this trend line will support a bearish momentum if price action continue to trade below that structure, as we want to be joining more opportunity below that level to the downside. And we also mentioned that a breakout of the trend line to the upside will definitely welcome a buy opportunity. And as you can see here, price action did the later, as we saw the breakout of that trend line here. And remember, we also had a key level at a 30,100 where we said we shall also be using that in conjunction with that trend line to guide our trading activity for yesterday. So if we scale down to a much more lower time frame, we can see things more clearly here. So that was the structure we used to guide our trading activity yesterday, and I hope you are able to take advantage of that move. And for those who took it, well done to you guys for being on standby to have caught that move. And currently, if you are taking that move right there, your first position will be currently running with about 60-70 pips in profit thereabout, while your second position at the breakout retest of the 30,300 will be running with about 55 pips in profit. So well done to you for being on standby to have caught that move. And the next thing we want to be doing right now, as usual, is to ensure that we secure the current position by moving our stop loss accordingly, as right now we have another new high at the 31,000 mark. And you all know what happens whenever price action hits a new high. It is prone to chopper situations, consolidation phases, retracement phases, as majority will be fearful of probably a risk of a sell-off in this market. So you will definitely be seeing some profit-taking activities, which would reflect on this chart as a retracement phase. So at this point in time, you want to be moving your stop loss. So the most appropriate area I will be suggesting that you move your stop loss to is anywhere below the $30,600 mark, which is the new structure I just identified here. So anywhere below the $30,600 mark seems most appropriate to secure your current buy position in this market. Now we still look forward to more buying opportunities as the momentum for the buyers is getting stronger every single moment. As you can see here, you can see we have been witnessing some engulfing candle which broke out of that 30,600, and there is a high chance that price could still break out of that $31,000 mark. So let's label this area. So that is a $31,000 mark there, and we expect a further breakout of that structure to happen too as well. And to make things much more easy so that we feel comfortable in our buy position, we want to acknowledge the fact that price action has been bullish also in the last 48 hours. So we want to bring out our line chart to connect the series of higher lows in this market, as you can see here. So we have a trend line which we'll definitely be using to guide our trading activity for today. So that is what we are going to be using. So as long as price remain above that trend line, we'll feel comfortable in our buy position. So let me delete this one. We no longer need this, and we just continue to use that trend line. So at any point in time, we could still have a situation where price comes back into structure, into the trend line. Buy pressure resumes above that structure. It could turn out to be a reversal pattern. If it turns out to be a reversal pattern, you know what we do. We bring out our line charts, find the neckline of that reversal pattern, look out for breakout retest. All this will be happening on our lower time frame. Then this will give us a confirmation that price is still going to the upside. We join the momentum place a buy stop order above the $31,000 mark to continue to add more position to our existing trade. So that is how we are going to be looking out for buying opportunities on the BTC USD today. So we have a very, very simple setup here. So for our bullish momentum here, as long as price remain above the trend line and the $30,600 mark, we remain comfortable in our buy position. Now, in as much as we're looking out for buy opportunity here, you all know that we also want to take into consideration the potentials of the sellers too as well. And if we consider the fact that price action has just hit a new high at the $31,000 mark, there is a high chance that a level of fear could come in ahead of the weekend, as a majority are not sure what could actually transpire in the financial market during the course of the weekend before the Monday morning session. So as a result, majority will want to be going in for the weekend already, and we could have some sell-off happen in this market. So if that was going to be happening here, what do we want to be seeing on this chart that will make us feel comfortable to probably get out of our buy position and get ready to do a sell-off, probably a counter trend opportunity in this market? Well, what I want to be seeing here is a breach of this trend line, that is price action breaks down the trend line to the downside. And as you can see here, that trend line also shares a beautiful confluence with that bullish trend line. So if a breakdown of both the structures happens, then we want to see this as a bearish signal. But remember, we are not getting too excited at that point, as we still need some confirmations to happen to give us that leverage that we could actually be selling the BTC USD. And mind you, this is a counter trend opportunity. So if you are not a counter trend trader, you are not a scalper, I would advise that you stay clear of this kind of opportunity. But if you are a scalper, you're a counter trend trader, you feel comfortable taking this kind of trade, then we could take advantage of this move at the site of a breakdown retest of structure. So remember what I just said here, we need some retest to happen to give us confirmation, which is likely going to come in the form of a retest of the 30,600 or the trend line here, where we start seeing selling pressure resume on our lower time frame, where buyers find it difficult to climb above both the trend line and the $30,600 mark. Then we could have a sell stop order below the structure to join a wave to the downside. And remember, since this is a counter trend opportunity, we want to be available on the chart to monitor price action, as we will be moving our stop loss accordingly as price action moves in our favor. Then we also have structures like the 30,300 if it's broken to the downside to add more sell position to our existing trade on this one. So at this point, I will suggest a TP target to be around the 29,900, which is likely going to be dovetailing into about 75-80 pips thereabout, after which, depending on how price action reacts to the $29,900 mark, will determine if we are going to be adding more sell position or getting ready to buy the BTC USD for another wave of bullish momentum at that point. So that is how we are going to be selling the BTC USD today. Sorry about that. So we are selling anywhere below the 30,600. So we are looking forward to a breakdown retest of the 30,600 to sell, and we're looking forward to a breakout of the $31,000 mark to buy the BTC USD for today. So that is my view here on the BTC USD, and I think my app just came up again. So if you have questions, I can read the comment section right now. Let me know right in the comment section if you have any. And okay, thank you, Mia Gigi. I just saw your comment now. Libadade morning, double profit this morning. Yes, okay. Norway 76. What do we think is good today? Well, we just talked about 4 to 5 instruments today, and we've deliberated on how we are going to be managing those trades and how we also going to be anticipating more opportunities on this one. Next 57, how are you doing? 780, thank you, good morning. And 828, how are you too? I'm fine here. Trust you are doing well on your hand. All right, and in the absence of no questions, I want to assume that we're on the same page, and you are able to grab one or two things from what we just talked about today. And for the newcomers, I hope you are able to catch one or two things, and I assure you with time you get to understand how this works. Join us on Monday as usual. It's 10 a.m. UTC, 11 a.m. West African time, as we come here again to have a fresh new perspective at the market in anticipation of the new week. So on this note, I want to wish every one of you best of luck during the New York session today. And please remember that we have macroeconomic events coming up in about an hour from now, the retail sales and the consumer sentiment index. So ensure you move your stop loss accordingly on all your positions as we anticipate this event. And I hope you also screenshotted my screen so that you can use them as a reference point when you're about to make your individual decisions. So once again, I wish you best of luck. Do have a wonderful day and a very merry weekend to you all out there. Bye bye.